This quarter, that's been an industry-wide phenomenon. Dharmender Kapoor, the MD and CEO at Birlasoft, joins us now to talk more about that. Mr. Kapoor, good morning and thank you for being with us on CNBC-TV18. Our earlier guest, Gurmeet, was just talking about how your company has a target of $1 billion, which is your guidance by 2025. But currently, if you look at the revenue run rate, it's about $575 million or so. How do you plan to achieve that $1 billion target? If you can just take us through the strategy.
Yeah, no, thank you, Sonia, and good morning. Yes, definitely, I heard the comment from Baljit. I wish he had left his phone number for me to call him. But anyway, coming back to your question, the way we are looking at is that it is going to be a mix of organic as well as organic growth. Today, if you look at our run rate, we can easily achieve about 850 to 900 million in the next 3 years. And then we are expecting that about 150 to 200 million will come from the acquisition, and we are working on that. And the acquisition, we are looking at to do it now so that in the next 3 years, we again have a run where we can grow the acquired revenue as well. Because our strategy that 3 years back, if we were ERP company, today we are an enterprise digital company, and going forward, our clear focus is on the platforms. And we are calling ourselves as a business-ready platform company. And I think the segment that we are focusing on, it is both niche and very fast growing. And that is the reason that we are getting the confidence that we will be able to become $1 billion definitely.
So, okay, just one follow-up there. You said that about 800 million or so will come in from the organic route, but you're looking at 150 to 200 million dollars to come in from acquisitions. Have you narrowed anything already in this calendar year, in the first half? Can we expect something? And how are you planning to fund those acquisitions? I mean, do you have cash on your books?
So we definitely have cash on our books. We have about 1,100 crore in our books, but at the same level, we can go and generate the cash from the outside also. So we are comfortable from that perspective. We definitely are in the discussions. We have a strategy as to what we have to acquire, what kind of company that we want to go after. We have looked at some of the candidates, but we haven't identified one so far.
And Mr. Kapoor, good morning, Prashant here. So this year, you said, we'll see something this year, you're saying?
That's right, yeah, that's right.
Okay, got it. Just 2 points. One, if you can tell us about when attrition will start to stabilize for you. It's come down for other IT companies, not for you. How long will that take? And will that continue to put pressure on margins?
So if you look at our attrition was higher in the Q3, and that is not impacted as much on the margin. We have improved on the margin also because some of the attrition numbers also look at what is the efficiency gain that we have had in the Q3. I think we are continuing to work on our attrition. We are continuing to look at how do we get better talent access. And there are a lot of initiatives that we have taken in the last 2 quarters, which should start showing us the result and result in the better EBITDA as well going forward.
Mr. Kapoor,
I believe that probably in about 1 quarter to 2 quarters, this should stabilize for most of the companies in the industry.
Fair enough. Mr. Kapoor, good morning. A couple of questions then. You have a commitment or, you have a bit of a dream of $1 billion revenue by 2025. Right now at 575. So is that a bit ambitious? And secondly, how's the deal pipeline looking now?
Yeah, one of the persons in my team said that yesterday, and I was very happy about it, that it is no more a dream. It is a target. Okay, so we definitely are committed to achieve that $1 billion.
Okay, and you stick by 2025 as the timeline for that?
Yes, that is right.
Okay. Fair enough. Can you tell us a little bit about the deal wins? Because, if you look at the quarterly deal wins, they've gone up. They have improved definitely compared to even the new deal wins have gone up, and even the total deal wins are on an upswing. On an average, what would the run rate be in this fiscal? And has the wallet share per customer also gone up?
Yeah, if you look at the deal wins, the good part is the ratio of the new wins is higher than the renewal, which is always a good sign because that will result into the new revenue and added revenue for the growth going forward in the coming quarter. So that gives us one confidence. Second, if we look at our top customers are growing, we have had this strategy that we will focus on our top 20 customers, which we moved to top 30 customers in this year. And if I look at the top 20 customers also, okay, they have grown significantly in this financial year. My top 20 customers have grown by 21%, and top 10 customers have grown by about 19%. So that is also a good news, because anything that we grow with our existing customers and top customers result into greater relationships with the customers, at the same time better annuity going forward. And when we have better annuity going forward, the predictability of growth becomes better, and that had been a key goal that we have been tracking quarter on quarter.
Just two things. On the con call, Mr. Kapoor, you said the deal sizes are small. They're not very large. So that is one. And second, you said that pricing, what you're able to sort of pass on as price increases is happening, but it's happening at a very slow rate. Just comment on these two, if you will, very briefly.
Yeah, so I'm sure that you would have heard it from almost every company that the deal sizes are not as big as we used to see. And there are two reasons. One, that there were TCV numbers that are supposed to be higher because these are multi-year deals. But as more and more newer deals are digital deals, the clients are also experimenting. They do not know end state because nobody has figured it out in every business model. And that is the reason the deals are cut into the pieces in the modular approach and given one after another, because at any point of time, if you have to change the scope, you have that flexibility and agility to change the scope also. And that's the reason the deal size has become smaller. But if I look at the pearls in the string, the same deal would be much, much bigger in size if you look at the TCV number. But we cannot talk about the TCV number if we have not put that in the contract. And that's the reason the deal sizes are small. So I don't think that should be a concern for any company. The good part is that the number of deals have increased, okay? And the new wins have increased. And that, I think, is really giving very positive momentum to the market. If I look at the price increase, it always is a slow process because it goes through the negotiation. And when it goes through the negotiation, the good part is clients are ready to pay the higher price for the right talent access. And I think that definitely is a good sign because that will bring the margins back.
Okay, so it was an absolute pleasure speaking with you. Thank you so much for giving us a lot of details on the business and the way forward. And hope we get to hear from you on your acquisition very soon. That's Birlasoft saying that a large chunk of the money will be revenue will come in from the organic route, but they are expecting to close an acquisition this year. About $100 to $125 million will come in from that, and growth is looking good for them. Let's take a quick break on that note. When we come back, it'll be time to get our technical gurus in. Shrikant Chauhan and Mitesh Thakkar will join in to tell us how to